Thank you very much, Mint, for this opportunity. If you look at the genesis of the issues impacting the sector right now, I would say they're really across three dimensions. One is just oversupply and shrinkage in demand. Second is lack of capital for developers. And third is more constraints on availability of funding for home buyers. There's been too much overbuilding in the sector over the last few years. And this, if you link into the fact that the investor community has pretty much disappeared from the market, has caused a lot more supply to be available than real demand. And this will take time to sort out, but is definitely a problem that will get addressed over time. I think the larger and more immediate issue that needs to be addressed is the lack of financing, both for the institutional developers as well as for the individual buyers. With the challenges in the NBFC sector that we've all seen for the last 12 to 18 months, a very, very critical source of capital for developers has absolutely dried up. And there is no quasi-traditional finance that today is available to support construction activity or overall real estate development activity. At the same time, buyers are also finding it more challenging with some of the grade 2 and tier 3 NBFCs to actually be able to raise loan financing for buying homes. So you put all these three elements together, it's a bit of the perfect storm. You've got too much supply, too little demand, not enough capital for developers to actually be able to continue financing their projects, and a tightening of capital for individual home buyers. How do we actually resolve this? I would actually suggest three steps. I think the first, which the government has already taken, is a really welcome one, which is making available a significant corpus for the sector overall. I think the one challenge here would be to make sure that this money is used where it will have the most impact. If you go back to the issues impacting the sector, it's not that there's not capital. The issue is the velocity of the capital and the movement of the capital. And what we need to make sure is this 25,000 corpus is actually used to free up a multiple of 25,000 crores. Simple terms, put this money to use where you can actually spur the cycle of completion, deliver product to actual buyers, make sure those monies start coming in, and start creating a virtuous cycle in the sector all over again. If you look at putting this money in the short term behind the projects that have a much longer gestation period, it is going to take that much longer for this money to actually create strong flows within the overall system, and the recovery is going to take a lot longer. So I think while the measure itself is welcome, we just need to make sure that the capital goes into the most appropriate use cases. I think the second is to actually have a very, very rapid action plan to identify the NBFCs that are under stress and proactively start addressing some of the issues that are both creating the stress as well as resolving issues with banks and other financing institutions who've got exposure to these NBFCs. Without that, a very, very large source of capital for the sector is not going to come back anytime soon. And that is going to create challenges for developers. And while we may see some positive spin-off from the funds coming in on the rescue fund, it will very rapidly devolve back into the situation that we're dealing with right now. In terms of stimulating demand, the one sector that the government should really push on is on affordable mass housing. This is a sector where there is always going to be secular end-user demand, and there is nothing like end-user secular demand to actually get markets stimulated again and see them growing. If you were to look at what this sector would look like 3 to 5 years down the line, a lot of the weaker balance sheet players, a lot of the smaller companies will find it very, very challenging, and you might actually see a lot of consolidation. We don't see the speculator demand actually coming back into this market anytime soon, which in the longer term is actually very good for the market because you then only have real end user demand, and you actually have a lot of the new developments getting populated a lot faster than the ghost towns that we've seen in the past. So 3 years out, we expect to see fewer players, much stronger balance sheets, a lot more end user demand, and hopefully a sector that's beginning to emerge out of some of the challenges that it's dealing with today.